All right. Hey, it looks like my mic's back on YouTube. You started and it's working? Still working on Zoom? Okay, good, good, good. Good stuff. But here's my YouTube working. Sorry for all this. It just turned my mic off on OBS for some weird reason. So I got both. Okay, cool. Oof. It took me forever to find the settings. Man, that was weird. So strange. Alrighty. Can we get over 73.91? My balance zone was 67 to 79, half. We're in distribution. Oh, you know, it's amazing any of this technical stuff works. I still think about dial-up internet. Yeah, I'm running both. Sorry, mute one of them then, right, Ian? Okay, okay. Good thing it's kind of slow. Sorry about the technical issues there, folks. Yeah, London just opened and it can't get over 91 used to be support, now it's become resistance. So, now the only problem with the short here is the follow through's a little sticky. You'll note that, you know, we're getting down here, right? It's a little sticky. There's going to be bids all the way down here to VWAP at 73. Yeah, Globex has not been bad at all for the last couple of sessions. You know, Monday till now. Yesterday was slow when I was on, and then after I got off, it was much better. So, and now it's stuck. So remember what I was saying yesterday, right? This kind of candle pattern is just a it's not a traditional candle pattern that I'm talking about. I use candles in a little bit of a different way than most folks do, right? I look at the candles to tell me how the business is going, right? And the smaller the candle, and these small groupings of candles mean that business is really slow. And it's very tough for us to take trades because there's no follow through, right? Ooh, was there a seller at 89 yesterday? Cool. Thanks, Moran. Alrighty. I still have volume, right? You can hear me on Zoom and YouTube. Cool. All right. Ah, the wonders of technology. Yeah, it's pretty slow. So, what are we going to expect? Do we have Nvidia earnings? 45 degree on 1 minute. No, there's no such thing, Raj. We have Nvidia earnings Is that tonight or am I off? Yeah, okay. So, and what's and of course I haven't even gone and looked at the news. So Nvidia, hmm, we'll see if we can get back up over 227 in Nvidia. Good morning, George, and welcome. Fed minutes before, we'll have a little, hopefully a little bit more volatility later on. Slow here. Oh, what just moved up? The overnight point of control moved up from 75 up to 88. So what does that mean? I'll talk about the infamous point of control, right? Market profile people use this term called the point of control. And they say, it's the fairest price to do business, right? Does that really tell you anything, right? If someone says this is the fairest price to do business, does that really help you, right? But if I told you the point of control is where we are distributing the most product right now. So we bought, the point of control was 75, now it's 88, which means we took that cheap stuff that we bought at 75 and we're making good sales at 88. Right. Yeah. Exactly, Cisco. Does that more help? Like, so it shows that distribution is happening, right? It shows that we are selling product at higher prices, that people are willing to pay more, right? And we're distributing, which is a good thing, right? Because that's what markets are for. Markets are built to distribute product, right? Just like a supermarket, you're there to buy tomatoes and apples and oranges. Here, you're here to buy ES contracts. So there are wholesalers who buy those contracts at cheap prices and then resell them for a profit. Pretty simple business, right? And we've managed to overcomplicate it so much that poor retail traders, they get all confused about this stuff. The value area, which is, if you look at a market profile chart, I'm just going to do a little market profile lesson today, if you don't mind, while we're waiting for this thing to get a bit busier. The blue stuff, right? That's where 70% of your inventory is priced, the value area, right? So say this was a car lot. Say this was yesterday's profile. Thanks, George. This was yesterday's profile, and this is your car lot. Up here you've got your Bentleys and your Ferraris. Here you've got your Mercedes and your expensive Lexus and BMW, like the 7, 8 series. And then down here you've got sort of nice cars, but not crazy expensive. All the way down here, and then here you've got your clunkers, right? The $1,000 specials that burn oil, right? Right. So basically, what it's doing, right? It's telling you this is where the majority of your inventory is priced. Okay. And so you can see it was here, and it was here, and now down here. Now we're inside. So that's all it's really telling us. It's not really telling us anything that is useful other than, you know, okay, this is where the inventory is priced. So If you start getting further away from it, you need more time to distribute this inventory and take it. Just like you need time to flush this inventory out and accumulate it, right? So market profile is a cool thing, but there's really only four things that you need. You need to know where the inventory is priced. You need to know things like poor lows, right? Poor lows mean that there's buying competition here. That's all it means. A poor high means selling competition. So how do you trade that? When you see a poor low, you buy the low, you put your stop underneath it, and you sell into strength. If you see a poor high, you sell the poor high, you put your stop here, and then you cover into weakness. Simple, right? So number one is inventory, which is the blue stuff, poor low, poor high, and single prints. When you have single prints, right? Single prints on the way up are a short position, single prints on the way down are trapped longs. And that's all you need to know. How do you trade it? Well, if you're shorting and you come down to the single prints, that's where you cover because there'll be buyers there. If you're long and you go up to a place where there's single prints, that's where you sell because there's going to be supply there and they're going to sell into the market. That's all you really need in market profile. Ledges, and when people really do a deep dive into market profile, and I've done it, I've spent years going into it, and guess what? You don't make any money, right? Time at price is a beautiful concept, but it's useless in making us any money. How do you trade time at price, right? So I love market profile. I love what they've taught us about it, but market profile educators never tell you where to take the trade, where to put your stop, and why, which is one of the most frustrating things. They say things like it's an art, not a science. How does that help pay my rent, right? I need to pay my rent. You need to tell me where to take the trade and why, right? So if you have a poor low, you buy the poor low because there are buyers there and they're holding the market up. That's support. And you buy that support, you put your stop underneath it, and you sell into strength. That's a simple trade. What I do is I use market profile, and it's like a map of the city, right? So map of the city, and then here is a map of the neighborhood we want to do business in, right? So right here in this neighborhood, is business good or is it slow? It's kind of slow. It's away from an edge. The trades I love are these look below and fails, right? Or when it accepts above a level, you look above and go. Those are nice trades, right? A look above and fail, right? So the 1 minute candle chart helps us execute, manage our risk, and see inside. The 1 minute chart is like, when you switch the lens on a microscope, right? Exactly, Moran. Exactly, right? So our whole goal at Trading Syndicate is to help you guys make money in a practical way, right? There's a lot of trading rooms and a lot of educators out there that use a lot of flowery talk, and you have to use this indicator and R&R and value at risk and this and that, and none of that's going to make you any money, and you're going to spend years trying to figure it out. Let's give you a simple framework where you take trades and where you don't take trades. Like right now, you could not pay me to take a trade right here. There's no viable business reason to take a trade here. Nothing. The candles are small. We know that we're distributing. We're taking that cheap stuff at 75 that we had, and we're selling it up here. And business is a little slow because, it's 3:15 in the morning in New York. People are just getting going in Europe and London. So there's really not much to do, right? Now, you can clearly see on the candle chart that there are sellers, right? You can clearly see that there are sellers here and here, right? Let's make this a little bigger so you can see it. You can see where they sold before they will sell again. They're going to let it pop up a little bit on these candles when they see some buyers, but eventually the sellers keep coming in, right? If you are building a short position, right? Let's do that. You know, that is a trade that is a valid trade when you see sellers. So if you're selling this area, right? And you're selling the 88s and the 89s, I mean the 88, 88 half, right? So if you are short here, right, you can see that they stop selling here. Right? So say you're short like, 88 quarter, 88. You can see the top of the candles are moving lower, which means you got a trend line, which means the wholesalers are lowering price. So when you see that, you're like, okay, I can stay short. And if it starts taking out the top of that candle and the market gets over this 89, then I know I need to start covering or reducing my position size. Does that make sense? Right, it's very practical. There's nothing we do in our room that's not practical. It has to be practical. Right? See, the top of that candle started to move up, but there's the top of that one, and there's our seller. That's our backup. If you're a short seller, you're selling with the sellers who are pushing price down. Right? Shorting this is no good. Right? Shorting this is a little better because you see price being lowered. Right? Which means you're not going to get the high. Right? Now you can see that there are sellers here. Right? Look. See? They were here, now they're down here. When the next candle opens up, right? So I'm short 3 at 88 and a half. I'm going to put a bid at, I went to put a bid at, and what did I screwed up. I should have had my bids in as soon as I put my short in, and I didn't. Right? I had an 87 and a quarter bid. It did not get filled, and I was slow. As soon as you put your short in, make sure you put your bids in because you know that there's a buyer here. So you want to front run that buyer. I'm just testing this with micros just to see whether I can get an 87 and a half fill. If I can't get an 87 and a half fill, I'll move my bid up to 87 and 3/4, right? I can always scratch the trade if it starts getting up. See, there's that seller, right? As soon as we lose that seller, we know we're in trouble, right? So the market's telling us, hey, JJ, okay, you're short, but it's a little choppy here, right? And this way you can manage your risk, right? You can manage your risk because the whole thing about this business is being there for the next trade, right? Everybody thinks trading is about making money, but trading is about managing your risk when the trade is not optimal, right? And a lot of us don't know when to take the trade, right? So I'm doing this right now because I know people are short, right? And I got an 87 and 3/4 bid, and I finally got filled on my last contract, right? So when you're shorting in chop, and I'm saying this because people do it, and also for larger traders who are building a short position based on the fact that we can't take out 91, right? Use these levels as warning. Like if we lost that seller for more than 10 seconds, then they're going to raise price here. If we lose that seller, then you can just put your stop here at 90, right? And stay alive. There's no reason if it starts ripping to add and add and add to a short, right? So it's choppy, it's tight. You can see that there's buyers here because why? How can you tell that there are buyers here? Do you need a DOM or do you need a footprint chart or any of that stuff? No, you don't need anything. All you need to do is look at the candles. The top of the candle is where they initiate. The bottom of the candle is where they stop selling. And that's what you never has anybody ever seen that in a candlestick book? Has anyone who trades candles or teaches you how to trade candles, Have they ever taught you that the top of the candles are where the sellers initiate and compete? The bottom of the candle is where the sellers stop selling. You know why? Because nobody who's ever written a book on candlesticks has ever distributed or sold size. Candlestick charting all comes from people who are following price, and they're they're not smart money. They're not the people who are selling thousands of contracts or millions of shares, unfortunately. So they come from a perspective where they've never sold or distributed a product. They've never had to compete with other sellers to get rid of their product before all the customers are gone, right? So when you're right, when you're trading candles, all you need to know, you don't need to know about patterns, you just need to know where the sellers are. See how we're over that level? Look at the bottom of the candle. It's right at that level I drew. What a surprise. Because what's going to happen is if you hold a market steady, it'll attract buyers. And the people who shorted under 89.5, now they're going to go and start covering. You see what I mean? So if you've tied up the inventory here and you see buyers coming in, you're going to raise price. So what happens is the short sellers come and cover here, the smart money, right? The ones who shorted here. Then retail comes in, wholesale comes in, and then retail. And then the people who shorted here, when they start to buy, the people who own the product start to raise price. And that's why you get those green candles like you're seeing. And that's why I covered that short at 87 and 3/4. I would have loved to get 85, 86 for it, but it was not possible, right? You know, so you don't need to learn, all these candle patterns like hanging upside down snuffleupagus and all this crap that they teach you because it's meaningless, right? And you can't trade it because you can't remember all of that stuff, right? There's no way you can ask a human being. I remember when I started retail trading, I looked at this candle book. It was like thick as a Bible, and I'm like, how am I going to remember all this when I'm getting punched in the face by market makers, right? And it took me years to like, oh Jesus, you know what? When I was selling size, I was the top of the candle. And I'll tell you a little story, right? While we're waiting to see if we can take out 91.25. So one of my first jobs on the trade desk, I was trading for this guy called the Penguin, right? He had made $400 million investing in Briex Minerals. He had stock at 10 cents and he sold it all the way up to $200 a share. And he was cheap, but people would come to him if you needed $500,000, if you needed $1 million to finance your company, you'd go to him and he'd give you $1 million. But if your stock was trading at $1, he would give you $1 million and you had to give him stock at 30 cents, deep discount. So he was always in profit. So, he goes, okay, go sell 100,000 shares of this for me. So I went and I put out an offer, right? And after like five minutes, he calls me back. He goes, how much have you sold? I go, none. Right? Because somebody was selling at 5 and scooping the buyer, right? And he started screaming at me, right? If you don't get my fill, pull my account. So I just started hitting bids and lowering price, right? And the stock started to go lower, 80 cents, 75, 70, you know, but he didn't care because he paid 20 cents for the stock. It's $1 stock. He paid 20 cents for it. So we sold it all the way down to 50 cents. He still made money. Get it? So that's the concept of trading around. You can be offered at a price, and in a stock, you're a seller at 5, but you can't sell it at 5 because somebody keeps scooping the buyer, and it's trading around you at 5. So what do you got to do? You got to get in and you got to be aggressive, and you start aggressively selling. And that is this. And that's why you get a trend line lower. Get it? Does that make sense? Right? Selling competition is one of the hardest concepts for retail traders to get because they've never traded size. Oh, hey, Phil. Good to see you. Right? Competition. And these markets are incredibly efficient because they're all algorithmically traded right now. Everything's electronic. So every time sellers move up, they move up simultaneously within seconds. That's why it seems like there's only one person controlling the thing because everybody moves at the same time. You see, unlike retail trading and institutional trading and market making, there's only one way to do business. There's not multiple ways to do this, right? And see, in retail trading, you got one guy's a fib trader, one guy is a moving average trader, one guy is a profile trader, one guy is, you know, looking at the stars and trading astrology. In institutional trading, that we are all trained the same way. There's only one way to do business. There is no monkeying about. We don't use indicators. We don't use book map. We don't use any of that stuff, right? We work orders, right? You're working at order. And that's the mindset that you need to get into if you're a retail trader. You are working your order. You're working out your order, right? Hawaiian lunar moon phase traders, exactly, right? So a little bit of a look above and fail of 91 and a quarter. They took price as high as they could. There's a 92 seller, and now we're back down, right? This way you can manage your expectations. When you're short, go put in some buy orders. When you're long, go put in your sell orders right away. Why? Because there's competition, right? You don't understand competition until you don't get a fill. The offer controls everything. You know why, George? Because we set the price according to the buying coming in, right? We set the price according to the buying that's coming in. So if there's no buying coming in, what do you do if you have inventory? So George is selling lawn chairs, right? And they're 20 bucks a lawn chair. But you got no buyers. What do? You put it on sale. Because the guy next door's got his lawn chairs on for 17 and you're selling at 20, right? But you get a nice sunny day, everybody wants to go to the beach, you raise price. Get it? The offer controls the market. That's why, you hear the dumbest things. Have you ever heard, when price is going up, they say buyers are in control? You ever hear that one? People will say, oh yeah, buyers are in control, right? Which is the biggest load of BS I've ever heard. What buyer wants to pay more? If I was in control and I'm a buyer, I want to pay less, right? Moran, good call, Moran. Yeah. It is so stupid. Why would a buyer be in control if the price is going up? It makes no sense. And nobody thinks about these things before they say them, right? Buyers are in control. The other one, which is stupid, is buyers and sellers are fighting each other, right? The buyers and the sellers are fighting each other. Think about that. You go into Walmart to buy, I don't know, you go into Walmart to buy a TV, and you go to look at the TV, right? You go to look at a TV, and a Walmart guy comes out and he's got a sword and he starts poking at you with a knife and trying to fight you to keep you from buying the TV. Does that make any sense? None at all, right? The sellers are in control. There is no defending. Here's another fallacy that you hear, right? So buyers in control, buyers and sellers fighting, right? The other one is defending price. Buyers are defending price. That is the dumbest thing that you'll ever hear. You know how you defend price? Sellers stop selling and raise price. That's how price is defended. And before I leave, I'll tell you a little story about a guy. His name was Taj. He had a deal and he made $120 million selling stock. And a beautiful stock. It went to about $15, $17 on NASDAQ. Great. He made about 110 million bucks. And he bought two Range Rovers. He had one Range Rover to drive and another Range Rover for when the other one was in the garage, because they always break down. So anyway, somebody started shorting his stock, right? They started pushing it down back in the old days before you could naked short. And he started buying it to hold it up, right? And we were like, what are you doing, right? He went through about 80 million bucks before he realized that defending price by buying is the dumbest thing you could do, because what he should have done, he should have sold a stock from 17 all the way down to like $1, done a reverse split and started again, and then he would have had $200 million instead of 100. Instead, he wasted $80 million of his capital trying to defend price. So those are the three fallacies that make absolutely no common sense. Number one, buyers are in control when price is going up. Who the hell wants to pay more? That's the dumbest thing. Number two, buyers and sellers are fighting each other. So you have that mental picture. You go into Walmart to buy something, and the sales associate attacks you with a machete, right? Stupidity. The other is buyers are defending price. Nobody does that. Anyone who's ever worked on a trade desk knows that how you defend price is by stop selling. And the only reason you stop selling is if you see buyers who are willing to pay more. Those are the three common fallacies that is taught to retail traders, and if you trade off of those kinds of things, you're going to lose so much money. So if you want to learn how markets really work, right, come into our trading room and we will teach you how to do this properly so you won't lose your hair and have a heart attack, right? There is no defending. The only thing you have to defend is your sanity and your capital, okay? That's all you got to worry about. And we'll help you do both, right? Simple, common sense trading for real people. That's our goal. We want to make real people real money. That's all we need to do. We got to look after you guys, because this business will really, really, really play tricks with your health and your financial health, right? Buyers don't lift the offer, sellers lift the offer. George, buyers do not lift the offer. They buy off the offer, and if there's enough of you suckers, we'll raise the price. The seller is always in control. The seller always has the lowest cost base. Sometimes the seller has to sell at a loss, but that's business, right? So if you're tired of bad trades, bad advice, silly axioms like, gaps always fill and things like that, come into our room. We'll teach you actually how to make money, and we'd love to help you. Okay? I'm JJ. I apologize for the audio. I think we've got it all fixed now, and we will see you folks at 9:15 for our next session, 2:15 in the UK. Okay? Thanks, everyone. Have a great morning. If you need me, reach out. Bye for now.